Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Tesla has no competition, absolutely none, as there is no other car company in the world that is capable of making a profitable EV. Not one other company in the world that is capable of producing volume production. Alright, there is one little one that does officially meet both those criteria, the Wulong Death Trap, but I classify that closer to an electric bicycle than a car. But we're in the third month of 2022 now. 4 years ago, Tesla hit volume production. It was a major breakthrough. I can tell you it was a bit stressful getting those production numbers up initially in 2017, wondering if Tesla could do it or not. And later, we heard it was much closer than we realized, and nearly didn't make it. There are other companies that do make electric cars and sell them to consumers, but they lose money each time they sell a car, so it's hardly competition if your competitors just continue to lose money on every sale, particularly whilst Tesla generates $10,000 or so every sale. Oh, and sells a lot more than just a few hundred. And now look what has happened just recently. A lot of evidence coming out about just how difficult it is to make an EV. I'm not just talking about legacy autos either, but the EV startups Rivian and Lucid. Rivian have just raised their prices as high as 20% increase. And the vehicle prior to this price increase, well, it wasn't exactly the cheapest. The truck, R1T, had a starting price of $67,500 and has now gone to $80,000. That is quite a boost and will reduce their market considerably. For a lot of people, this price goes from an expensive price tag to unaffordable. $80,000 is a lot of money. In the Rivian Facebook group, there are tons of members reporting they've cancelled their orders and are very dissatisfied with these price rises. Of course, they still get tax credits. And I have a feeling Rivian will be receiving tax credits for some time, maybe its entire life as a company, until it crashes and gets acquired by Amazon. Admittedly, this price is still cheaper than a Model X, and like I said, the customers get tax credits. Now, Rivian blames all this on inflation, of course, but there were internal pressures already. Apparently, Rivian's finance director worked to develop projections showing how much of a loss the company would incur if Rivian did not raise prices. Yet, it's tough making profits with EVs, even at the high end. But imagine how much harder it would be to make affordable EVs. I was literally saying this the other day in a video explaining why EV prices will all have to rise. It's for this reason they simply can't make a profit. They can't get their costs down low enough, so the only other option is to raise prices. Expect it to come across the board. I also explained how EVs should be more expensive than ICE cars anyway, as it is a better product. It costs less to run and has a longer life use. Therefore, I believe it is acceptable to raise prices anyway. One issue for the other EVs was that they had to remain competitive to Tesla, but Tesla have been raising their prices anyway. We're only talking about price points here, not value. Obviously, Tesla will always be the best value at every price point. Elon also just tweeted this. Our primary challenge is affordability. Creating an expensive truck is relatively easy. If it is extremely hard to do so for Tesla, despite our much greater economies of scale and better technology, then it is damn near impossible for others. Once again, Elon mentioning just how hard EV production is. Okay, great. Well, if Rivian's customers are willing to pay more for the brand, then Rivian has a higher chance of survival. But I'm not sure Rivian are going to get away with a higher price point. This is incredibly tough. Oh yeah, don't forget, there may also be a Cybertruck on the way sometime too. That might also impact Rivian's demand further again. I don't understand how this company is going to meet its targets. But maybe Rivian will have enough demand, as there doesn't really appear to be much other competition out there, other than Tesla. Still, no one else today is capable of making EVs successfully, so maybe there is enough demand for an $80,000 Rivian. And things aren't going swimmingly for Lucid either. Lucid have just cut their car production forecast for this year by 40%. Expectations of production has gone from 20,000 units for the year, now down to just 12,000. And we know there is a good chance it will probably come under 10,000 even. The company is blaming, you guessed it, supply chain issues. Funnily enough, not chips though. No, having issues sourcing commodities like glass and carpet. But I'm sure it is likely a lot of it is coming down to manufacturing too. We know the real story. EVs are a really tough game, especially when all the best talent wants to go where they have the most resources and potential to live out their ideas and creativity, where it is encouraged. I'm talking about Tesla, taking all the best labour. I don't think Lucid can raise their prices much further though. $139,000 is a lot of money. If they can't make profits at that price point, then what chance do they have? Lucid has differentiated themselves from Tesla to somewhat justify the price tag and offers a more luxurious vehicle with even longer range than Tesla. But when Lucid offer their standard model, the Air Pure, well, they'll need to somehow try and make a profit when the price tag is reduced to under $80,000, and possibly fairly soon, as I'm not sure how many people really want to spend $139,000 on an EV. Remember when Tesla launched the Model S and it had a fairly high price tag, particularly adjusted for inflation? Well, Tesla could more than justify that price point. They offered something very unique, an electric car. Now there is a lot more competition. Luckily, Lucid doesn't have that major targets to reach just yet anyway. Just taking a quick look at Lucid's Q4 report, revenue was $27 million from 125 deliveries. That actually comes to $216,000 average selling price. Perhaps there are some options to order to take the price that high, I'm not sure. But it did cost $155 million to make that many cars. That's right, cost of goods sold was $5.7 million per vehicle. That's an expensive car. That was just the cost of building them. The company itself also cost money to run. In fact, this ended up creating a net loss in GAAP earnings of over $1 billion just for Q4, and they only have $6.2 billion left in cash. That's enough cash to make over 1,000 more Lucid Airs before they can't make payroll. Right, of course, that cost of goods sold per vehicle number will decrease as the production ramps. However, the total cost of goods will obviously increase, particularly as they go from, say, 125 vehicles last year to 100 times as many this year. At this trajectory, of the current burn rate, Lucid will be out of cash by the end of this year. It's early days still, so we never know, and hope for the best that as many EV companies make it as possible. But it goes to show, once again, what an incredible job Tesla do, or even managed to do 10 years ago with the Model S, the equivalent of where Lucid is now, except struggling tremendously despite all the EV breakthroughs over the last decade. Lucid's current valuation of around $40 billion sounds like it's based on some sort of path to profitability from here, but it looks like a very quick crash and burn at this stage. Lucid is two-thirds owned by a Saudi sovereign wealth fund. You're messing with Saudi's money, which is basically bottomless. They can sink as much as they want into Lucid. They're looking for a new industry to replace their previous. Tesla have proven itself to be very profitable and a lot of potential, even potentially more than Aramco. Obviously, the Middle East is going to get a big shock when the world's demand for oil keeps dropping and they need a new industry to replace the old. They have lots of money to sort it out. Why do you think they floated Aramco? Dubai is the same, but instead of investing in an EV company, they turned to tourism. Given that this company is really just funded by a wealthy oil oligarchy, then maybe the burn rate isn't as important. Maybe Saudi Arabia can just top up the capital when it's required and keep the company going until maybe it makes a profit, which it may never. And Aramco may crash too. In the meantime, it looks like Lucid is acting like it has all the money in the world, announcing a new factory plant in Saudi Arabia with a capacity of 150,000 vehicles, and they're going to start building in a few months, which would indicate a lot more capital available to them eventually. Anyway, I don't think Lucid deserves any valuation remotely like it does today, until they can at least prove they can manufacture with a reasonable gross margin, or a positive one, rather than negative 33,700% margin. For me, that's still quite a way to go. Lucid have also delayed the launch of their Gravity SUV. A luxury sedan followed by a luxury SUV? What a clever business model. Then perhaps release some more affordable models along the way. I see. That sort of plan could actually work. It's pretty clever. You know, only if they can ever make a profit, which may need a bit more cleverness. Lucid are clearly going for the luxury market and branding themselves heavily that way. In their defense, it is a lot harder to go for affordable EVs. Lucid's price points are so high, surely they're bound to make some profits eventually. It will certainly be interesting to watch how these two EV companies grow. I don't say this to put Lucid down, I say this to support Tesla. Tesla doesn't get close to the admiration it deserves through all of its absolutely marvelous engineering and technology. We should be hearing Biden stating how proud he is that Tesla is an American brand and everything Tesla is doing for America. It's a shame, but the Tesla community is aware to the corruption and cronyism in the government, media, and corporate America. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.